apartments have decoupled themselves or divorced themselves from the regular economy. So when we go into difficult times or into recessions, and the economy goes like this, other real estate follows along. Apartments don't. Apartments, the peaks and the valleys from the apartment business have been smoothed out. So when the economy is going like this, up and down, apartments are going like this, right? So we've been through many recessions, and institutional investors have come to realize that apartments are probably the most stable alternative asset class. Right now, institutions and the institutional investor is turning their attention from traditional investments to alternative investments. Real estate is an alternative investment. And within the real estate asset class, apartments are the most stable asset class. Okay? So the attention on apartments is more, especially in uncertain times. And the world is in uncertain times. Economically, politically, every way you can imagine right now, there is uncertainty. So apartments are that stable asset class in the alternative asset class to where institutions are turning their attention. The problem with apartments in Canada is that the stock of apartments is old. Institutions typically do not want 50, 60, 70-year-old buildings in their portfolio. I mean, simply said, institutions want their apartments to look like their office buildings. And apartments don't look like office buildings. They're 50, 60, 70 years old. So the interest in new apartment construction for institutions right now is significant. Okay? And this seminar that we're going to do focuses on the needs of the institutional apartment developer and the institutional investor. And we answer many questions about what should they build, where should they build it, how much can they charge, what's the depth of the market, what will the profitability of that building be built, how do construction costs affect the business today. Institutions also tend to think long term. They're value investors, or they're a combination of value investors over the long term and yield investors over the shorter term. Well, we know that institutional developers are pivoting to new apartment construction. Okay? It's a natural fit. Most institutions have development groups within them. Those development groups have been busy building infrastructure, building retail, building office, and so on. And with other asset classes being less certain, office, retail, and apartments being certain, these groups are now pivoting their development to new apartment construction. Okay? The content of this seminar is for for all the people that work in that institutional space of developing apartments. Apartments have typically been historically developed by private developers who at times would sell them to institutions, but they don't want to buy those older buildings. Okay? And with the cost of buildings being so high right now, the amount of the complexity of building a high-rise apartment building, the cost of building it, the equity required, makes institutions now much more viable to develop purpose-built rental apartments that were typically developed by the private sector. The shortage of purposeful rental housing is well known. We don't need to talk about that. There's also pressure from all levels, ESG, environmental, social, and governance, diversity, DSI, diversity something, for institutions to participate in increasing the supply of rental housing and increasing the supply of affordable rental housing. Apartment supply and affordable housing are on the radar screen for everyone. And institutions have the capital, the social conscience, and the capability to increase the housing supply in Canada.